Hi, it's Paul Tate here at Your Property Financial, and in this video we're going to discuss the different steps in the house buying process for a home mover. When it comes to moving home, there are numerous options to consider depending on your main goals and preferences, and in this short video we will cover some of the key areas. Ultimately, moving home, when you're either selling or remortgaging your current property, can feel like everything is happening at once, and it's important you take time to organise yourself effectively to achieve the end goal of moving home. So let's start at the beginning. Speak to your mortgage broker. First things first, speak to your mortgage broker, as they can work out your borrowing options, highlight likely costs, and they can work out things like your monthly payments and potential mortgage terms available. Before you start viewing any properties, you need to know your borrowing position, so you don't spend time viewing properties below or above your budget. There are hundreds of variables of criteria rules on what a lender will compare your circumstance against, and most of the time it's very black and white. You fit the criteria or you don't, and lenders are well known for being very strict on this. Your mortgage broker, however, will be very familiar with all the different lender rules and criteria and will help you navigate that accordingly. Key documents reviewed. Your key documents need to be reviewed ahead of your mortgage application. Part of speaking to your mortgage broker will be for them to review your key documents to ensure the numbers you're working off are going to be achievable. Things like your income makeup and your credit report will be reviewed. And ultimately, when it comes time to apply for your mortgage, the lenders will ask for additional specific documents. The lenders will also be looking through these documents very carefully and will base their decision to lend based on your documents. By reviewing these up front, we can make sure we know we're not going to have any trouble or misunderstandings with the lender when it's time to apply, and equally some documents such as your tax calculation document if you're self-employed, or certain proof of address or proof of identity documents as an example, may take time to be obtained and be readily available. Lenders will not accept any applications where these are not available and showing the correct numbers and details. Deposit confirmed. Making sure your deposit is sorted is key to purchasing a property. Is it coming from savings, gifted by a family member, or some other arrangement? Are the funds in your account available, or an investment you need to sell, or coming from overseas? Making sure there is clarity on how you're raising your deposit is key, as depending on your plans, there could be different steps you need to start completing now to be able to evidence your deposit to the lenders. If family are gifting deposit to you, this can be something you naturally need to have several conversations with them about in advance, so you're all 100% now on how much is being gifted, and they will also need to sign a gifted deposit letter for the funds being gifted. Evidencing your deposit is mandatory and is part of buying a property, and you'll need to be able to provide documents confirming your deposit. Quite often, you'll have the savings in an online account which may not provide regular statements. Lenders and the solicitors won't accept screenshots or online printouts that don't have your name and several other important points showing, so again, organising the evidence of your deposit is very important. When it comes to moving home, your deposit will typically come from the sale of your current property. This is where it's good to engage 2 or 3 local estate agents to understand the realistic sale price so you can work out the numbers you have to work with. Equally, you may wish ideally to retain your current property and turn it into a buy-to-let property and remortgaging on that basis to release the deposit that way. This is commonly referred to as a let-to-buy transaction or mortgage. Of course, you need to have sufficient equity in your property to do so, and typically you're able to borrow up to 75% of the value of the property, though this will depend on the ownership structure of the property, rental income likely to be received, and several other key points. An area to definitely speak to your mortgage broker about to learn more if this is a viable option. What are the costs to purchase? Confirming your costs early on is important so you can budget accordingly and not have any surprises come up later on. Confirming your stamp duty land tax liability. Depending on whether you're a first-time buyer, home mover, buy-to-let investor and or own any other properties, and the price of the property that you're buying at can all impact the potential tax liability due. Solicitors' costs, broker advice and arranging fee, lender arrangement fees, survey charges, removal costs, all have applicable costs to consider and be aware of, and ensuring you budget accordingly for all of them is important to ensure you have the available funds to complete your property purchase. Remember, most of these costs increase as the property price increases. Of course, when it comes to taxation, it's important you speak to a solicitor or an accountant to understand your own specific tax liability, as whether you've owned a property before, are married to someone who owns a property, a first-time buyer, or how much the property is, all can be important factors in determining the eventual stamp duty tax bill. Mortgage pre-approved. A mortgage certificate or an agreement in principle, if applicable, should now be arranged. Now you've got your numbers sorted and you know what you can go up to and how much it will cost you, you can either get an agreement in principle, otherwise known as an AIP, or a mortgage certificate, so you have the confidence you can proceed on the numbers in hand and evidence that to the estate agents if required. Get your property onto the market. Now you've got your finances pre-approved, it's now time to get your property onto the market. It's often a good idea to have considered several different local estate agents before choosing which one you'd like to instruct to sell your home. The percentage or fee that they charge you is certainly one consideration, but it shouldn't be the only one. You want your estate agents to be motivated to sell your home, and so yes, their costs should be fully considered, but ask the agents to explain what they're going to do differently to help sell your home. Remember, the estate agents ultimately represent you, the seller, so always trust your gut on who you want representing you, and ultimately which company you are entrusting to arrange viewings around your home. Start viewing properties. Now you've got your finances prepared, you're good to go to start viewing properties you're interested in. This is obviously the more exciting part of looking for a property, and certainly something you will enjoy more, knowing you've got all your finances sorted, so you know what's within your budget. Making an offer. Once you've settled on your home you like, now it's the time to formally offer the amount you would be prepared to pay to purchase the home off the current owner. It's worth noting that sometimes to get your offer accepted, it's as much about your ability to deliver on that quickly versus being the highest offer on the table. I.e. a high offer, but a 6-month wait for it may not be as appealing as a slightly lower offer and being able to complete in 3 months as an example. Always remember to CC your broker into your offer when you email this to the agents so that they can support by reconfirming any offer you've made is fully proceedable. Offer accepted. Congratulations! The vendor, otherwise known as the person you're purchasing off, has accepted your offer, and now subject to the contracts being exchanged and completing, the home is yours. Now you need to move promptly to proceed with the following steps to make sure no delays start to occur that could risk the vendor from withdrawing from your accepted offer. Application submitted. With the offer accepted, you will now progress to submit your application to the lender. The lender will shortly complete an underwriting assessment of your application to ensure you meet their criteria, along with assessing your documents and shortly performing a survey of the property in question. Solicitors instructed. After your mortgage application has been submitted, you can now instruct your solicitors. Your mortgage broker will give you a heads up when they can be instructed. It's important to not instruct your solicitor until your mortgage application has been submitted. This is because your broker needs to confirm your application has been received, and just as importantly, that your solicitors are on the lender's approved panel of solicitors that they work with. Lender mortgage valuation. The lenders will now instruct one of their approved surveyors to attend and or review the property to ensure it meets their acceptable criteria, is valued at the price you're looking to progress at, and is likely to remain acceptable to them to lend against over the mortgage term. This survey is only for the lender's purpose and is often priced low or actually paid for by the lenders, so you will not likely see a copy of the report. Provided it comes back satisfactory, you will be able to progress. Mortgage offer issued. Congratulations! Now the lender writes to you to formally confirm they have approved you and the property to lend against, and therefore are formally able to confirm they will provide the mortgage to complete your purchase. Surveying the proposed property. Now is the opportunity to instruct your own personal survey of the property you're buying, as the lender mortgage survey on the property is basically to cover things from their side when it comes to lending against the property, but it won't provide any significant information for you in terms of problems or works that may be required in the property. A more in-depth survey of the property is therefore important to ensure you're comfortable with the property you're about to take ownership of. Property searches and legal due diligence completed. Solicitors complete legal work after typically 12 weeks for a leasehold property, buying a flat, or 8 weeks for a freehold property, buying a house. Exchanging contracts. Exchanging contracts is the final step ahead of completion, i.e. you exchange contracts to buy the property from the current owner, and they exchange contracts to confirm they will now sell it to you. This is legally binding, and therefore you should typically complete the purchase within a matter of days, as you are legally committed to the purchase now is a time when your buildings insurance and other relevant insurances would go live. Protecting yourself, your property and your family. Insurances need to now go live once you've exchanged contracts. You will need to ensure buildings insurance is in place at the full rebuild value cost of the property. If you're purchasing a freehold property, typically you will need to arrange to put this in place yourself, albeit your mortgage broker can assist and advise on this typically. If you're purchasing a leasehold property, typically this will be included in your service charges, so is already in place. In both instances, ensure you clarify with your solicitor before exchange of contracts relating to this, as it is your responsibility to ensure the buildings insurance is in place. Completion and collect your keys. Just like that, you bought yourself your new home and property and are now the new legal owner. You can now go collect your keys and enjoy your new home. I hope you found that useful, And of course, as your property purchase progresses, your mortgage broker is going to be on hand to assist and advise throughout the whole process. Any questions, please comment below. And if you found this video helpful, please like and hit the subscribe button so you can follow us so you don't miss out on our next video.